Good morning, traders, and welcome to Phoenix Blues Morning Update. My name is Nishil Patel. I hope you're all very well this morning. Um, Today is Thursday, the 15th of December, and I'm going to be giving you a snapshot of what's happening on the market. It is 10 days to Christmas. Let's see what effectively we're getting. Just prior to the run-up of that, obviously, there's huge news that came out yesterday, and we're going to discuss that a bit more when we look at the charts, but just having a quick look at what's happening today in terms of data that's being released and announcements. We have a huge amount of data coming out this morning. We've got the London Interbank offered rate coming out on the Swissy. The Swiss National Bank is also giving some details. So that's going to come out first thing this morning. Obviously, that's going to have a knock-on effect onto how the markets are playing out. And big data also out on sterling, so GBP, that's at midday, which is going to be very interesting considering we are probably looking at a certain amount of strength coming out on our cable chart. Canadian dollar does have manufacturing sales out just afternoon, and again more USD announcements, including the fortnightly unemployment claims. So we've got some numbers out on the job side, and we do have CPI data out as well. So quite important from the US. Remember, we have had strong data out from the US up till now, and I think that's going to lead us straight to our charts and looking at what we're seeing on the charts. I think the very first place we should start off is the dollar index. Dollar index right now floating at 102. 102 and a half. So the dollar looking very, very strong. And unless if you had no understanding of what happened at last night's FOMC announcement, and with Yellen chair speaking, there was further, or I should say, there has been a bout of tightening on their policy. There has been a rate increase of 25 basis points, or 0.25%, on their current base rate. So what we've effectively seen is a strong, very, very strong bullish dollar, and definite momentum on the side of the dollar. And we're going to see that across the board on all of your charts that you will be having a look at. Also, going on forward, looking forward into 2017 and what was given on the press conferences, and what was understood was there could be continued tightening of policy as long as the data looks good coming out from the States. So what that effectively means for us is if we've got strong growth figures and strong inflation reports coming out stateside in the best part of 2017, then what we will see is continued tightening policies set up from the Fed, and a continuation of hikes, potentially two, but maybe three. And please remember, it's potentially and maybe. It's not definitive. Just because you read it in the press doesn't necessarily mean it is so. It's always dependent on data that's being released. Remember, this time last year we had just had some tightening again from the Fed. I think the Yellen was a lot more dovish than she was this year. Yesterday's press conference was definitely very hawkish and looking to the side of continued tightening from the Fed. So definitely, well, it seems as if it looks at a further 50 to 75 basis point hike during the period of 2017. So we're looking at potentially two, maybe three hikes over the course of next year. And as I was saying, don't forget, this time last year we were looking at something very similar, though the data was not as strong as we've seen it recently. What does that mean on the markets? We've obviously seen what the dollar index is doing. I think what we should do is just have a quick look at some of the currencies, and a big one, or the one that's moved the most, I would say, is most certainly the yen. You can see I'm running a small position right now from 117 and up to 118, and it's a fairly small position on that, but doing very well and currently around 80 pips up on that. We have had a number of options from the Phoenix Blue team in terms of trades that have been placed, and including our Protege members, and many of them were good quality, safe trades, which I was very impressed with. So well done, Protege, for the Protege group there. But this, I would say, has moved the most. We're looking yen floating just below 118. Let's not forget, after the continued push from that, from the lower 104, 105 level, which was, let's not forget, again, just about a month ago, we pushed from that 105 to the 115s, where we saw it prior to just before that announcement, looking at this daily time frame, and then a continued push from that 115 straight up, breaking through the 116, 117 and into close to the 118, where we probably will see some sticking ground and probably see a degree of correction on that. Euro, again, we're looking at the two largest components of that dollar index that we just looked at, the first chart that we observed. The euro right now floating at 1.0480s, has broken that 1.05, which was again a very big sticking point, and we saw that off the back of the announcement. So we saw euro tumbling down to what effectively is our daily S1 today, pulling straight back above that 105, stuck around that, and then on the overnight session has picked up the ground again as we've seen the continued buy up of the dollar, and the sell-off in this case. Australian dollar hasn't moved as much, but still we've obviously still seen the dollar strength come into play. This is a 4-hourly time frame, just moving over to a daily where we can see it, where it's a lot more evident. Again, trades being placed on this, and quite a few trades that we have had over the course of predominantly at the start of the week, and setting ourselves up for break-even scenarios prior to the FOMC announcement. And I know a lot of people have banked profits, myself included, over yesterday. Right now floating at 0.7397, so just below 7,400. Is sticking there again. Remember, being an asset-rich country that Australia is, we should have potentially seen a little more on the downside on this. As we're talking about, we could have a look at the Kiwi as well, but let's not forget they are very similar. I think what a good idea to do is maybe have a look at a couple of the commodities. I think the first one we'll have a look at is WTI. WTI right now, we'll just have a look at this daily time frame. Just sitting above the 52, had broken that 52 level overnight, and literally this morning has just come above that 52. Again, a very key and important level here. It shows that the dollar has driven a lot of the commodities down. Also, let's not forget that contractually there is nothing set in stone. Which I think a lot of people are forgetting and maybe have been caught out from the weekend announcement from the meeting with OPEC and a few other non-member states on price, or I wouldn't say price collusion, is more like output collusion, and production figures, and therefore trying to increase or jack up the price of oil. We saw oil come about, and as we see on this chart and on this WTI chart here, has broken that 55. And we saw the gap, which is quite evident on this chart, before coming down, and yesterday literally breaking through that 52, coming very close to the 51.50, and not quite, and then has bounced back up again this morning, probably looking to expect this to work its way back up, meander its way back up. But remember, any kind of strength in the dollar, would probably see this pull back down. Again, I think that we may see price action stuck in and around that 52 zone. Would be nice if it started heading north of that zone. Gold, I think it's look, I think we should have a quick look at this as well. Obviously, with the strength in the dollar, this has broken. It's broken down on the sharp side, coming off that daily. Well, it's today's daily pivot, but really smashed through that 1140 area, which was key over the course of yesterday's FOMC announcement. Come straight back up and then pulling right down 1135.93, so just above 1136 right now. Still looking very, very bearish. Potentially has got some has got some legs to run. So that was the 4 hourly chart going into the daily there. So there's definitely a lot in play. The last chart I really want to have a look at is cable right now. There is cable on a daily time frame, having broken what I outlined at that 2540 area. 25 again was key. Breaking down off that is again looking very bearish, but we have seen strength on the side of cable. I think what would be good is if we just delete this here, and guys, if you just remember that your analysis, keep true to your analysis and start doing what you should be looking at. And what we're seeing just off a quick trend line that we're drawing here is we've seen a break of that trend line, effectively a test after onto today's bar, and just coming off it hasn't seen as much movement as we've seen on the euro and the yen, or I would say the yen anyway. The euro has fallen considerably, but but cable or sterling has held its ground to a certain extent. We do have a lot of data coming out on cable today, which will be quite interesting to see. Because of that, I think it brings a few charts into play. Here is one chart that I'm going to divulge on our side, on potentially what looks like a nice easy trade. This is GBP JPY, or sterling yen. As we can see, this is trending very well off the strength on the sterling and the weakness on the yen. This chart is just going long right now, sitting at 147.50. There are some key levels on this. I'm not going to highlight them out for you guys on this morning's update, but if you'd like to find out more on how you'd like to benefit on this, and most importantly, look to benefit off our teachings and the continued momentum that we'll probably see going forward into 2017, which will be good. Would feel free to send us an email at info@phoenixblue.co.uk. Alternatively, visit our website. Welcome any questions that you may have in regards to this morning's update. And I wish you all a very happy Christmas. Tomorrow's update will be the last daily update for this year. And I know that we look forward to seeing all of you guys come 2017 in January, where we kick off the first quarter as we did this year's, as we did 2016's first quarter, with very, very strong results. It was a fantastic quarter for us, and it tends to be a very good quarter for us at the start of the year. So January looks really, really promising again for us. If you have any questions, feel free to get back to us. And until next time, guys, and have a very Merry Christmas and happy trading if you are trading throughout. Take care. Bye-bye.